In an effort to help countries around the world recover from the COVID-19 pandemic, the International Monetary Fund (IMF) on Monday announced that its new allocation of special drawing rights, equivalent to $650 billion that's what will be made available. This development by the IMF is the largest allocation of special drawing rights in history, as it will provide additional liquidity to the global economic system, supplementing countries' foreign exchange reserves and reducing their reliance on more expensive domestic or external debt. Out of the $650 billion Nigeria will receive about $3.4 billion as its share to mitigate its impact on the country's economy as it grappled with dwindling government revenues and, of course, economic challenges. I have joining me via Skype. I introduced him earlier. He's an investment analyst. He's Mr. Ayorinde Akinloye. Mr. Akinloye, good afternoon, and it's good to see you this afternoon.
Good afternoon, Tolu. It's always a pleasure to be on the show. Thank you for having me.
Yes, the president of AFDB came out clearly to say that this fund will actually help the African continent. About $27 billion is meant for African continent, and $3.4 billion is to be allocated to Nigeria. Now, how does this come to you, and what effects do you see this having directly on our economy, of course?
Okay, clearly this is definitely very positive for Nigeria. First, it's just important to clarify what these SDRs are, because there's been lots of misconceptions. Thinking basically this is a direct cash injection for our reserves. Although yes, it gives that implication, but clearly what the SDRs are basically sort of allocation. They are rights given to Nigeria, to the country it is allocated to basically as a claim against other foreign currencies, like say the US dollar, pounds, or sterling, or the pound sterling, or the euro basically. So for Nigeria, what that implies is we are getting SDR special drawing rights worth about $3.4 billion, and it means at any point in time when the federal government so desires, it can decide to draw down on the rights, either to the full tune of 100% of 3.4 billion, or maybe a percentage of it. But all in, it's definitely positive, because yes, at the end it will definitely still lead to that cash injection at some point in time. So clearly, the based on the communication from the IMF, the disbursements became effective 23rd of August. So people might be wondering, why is this not reflecting on external reserves just yet? It's basically because of the reason I mentioned earlier. The federal government and the CBN, basically a conjunction of the economic managers, have not taken a decision yet whether they are going to draw down on their rights, or either they will just keep till probably next year. And we suspect that the federal government will most likely not be drawing down on those allocations for now, until when there's that clear need for it, most likely next year, because they seem to have other sources of particularly external financing that they're expecting much later in the year, in a couple of weeks time. So they most likely would want to still hold on to the SDR allocations till next year. But overall, it's definitely going to be positive for external reserves at whatever point in time they decide to exercise it. I mean, currently external reserves are about 35 billion, about 35.5 billion. So if you had that additional 3.4 billion, we're talking about external reserves heading towards the 39 billion mark, and that definitely strengthens the CBN's ability to defend the currency more, whenever they decide to draw down on it. And then similarly, it also provides the federal government cheap financing, because the interest that is charged on these allocations are typically very minimal, somewhere around the 1% mark. So it's much cheaper compared to say issuing a bond locally, or doing an Eurobond issuance, or things like that. So it's much more cheaper, and means cheaper credit again for the federal government, most likely next year, when they might decide to just fit it into the 2022 budget. Thank you.
A very good way to start again. Ayo, let's now look at this, as it has been done before. I think in most recently was in 2019 or so. I'm talking about SDR and the impact is what I'm asking again. Now, for countries like Nigeria, we know the kind of challenge that we face. So this is not money, it's not direct monies like you've explained. How will countries use the SDRs?
It's basically a right, is an allocation.
Yeah.
But as a country, you can convert it to money when you need to by basically you can exchange it for specific currencies.
Okay.
So the SDR is a reserve built by the IMF basically the value of the SDRs are typically tied to 5 major currencies. The 5 major currencies across the world. The US dollar, the euro, the pound sterling, the Chinese yuan, and the Japanese yen. So those 5 key currencies, right? So as a country, I can basically exchange the SDRs for this currency, for the equivalent value of these currencies at whatever time in future, whenever I need to draw down on my SDR balance. So what the IMF has done is that it has given Nigeria the right to draw down up to 3.4 billion of its SDR quota with the IMF, because every country under the IMF has a quota. So what the IMF has done is they have given us the right now to draw down up to 3.4 billion. It is now left for us to decide when we want to exchange. So in the process of doing that, the IMF can facilitate the exchange, and we can facilitate it by maybe being in discussions with fellow IMF countries by exchanging the rights for money. So for those who have enough liquidity, they can give us dollars and we give them the rights. So the rights comes to their position, more like exchanging the rights for actual cash. So that is dependent on the federal government deciding whenever they want to do that, and whenever they do that, like I mentioned, it's going to be positive for external reserves and it's going to be positive for the currency also.
Staying with this now, IMF is also projecting a 6% growth rate, or global growth rate. Of course, all of this is to make sure that there's growth globally, one way or the other. And vaccines and all of that will be key to this growth. What's your assessment of this projection? Is it not looking like a tall order?
Yes, definitely. It looks quite optimistic, expecting, with projections for growth for the global economy. But again, you also look at the fact that when you look at most of the key drivers, right? Because there's always a need to pay attention to the key drivers beyond just the headline forecast. It's always important to look at the drivers or the factors, supporting the projections. And number one, you look at the low base effect from last year. So we need to recall that last year, the fact that the global economy contracted significantly, the low base from last year basically already creates, that opportunity for an artificial growth, basically considering that low base. Because when you look at the mathematical computation of GDP, so you take GDP for 2021 divided by 2020, what you're dividing by, which is your denominator, is already very low. So there's always the mathematical impact of the low base effect from 2020. That's one. Number two, also depending on how soon economic activities are restored to full capacity or to complete normalcy. But again, we've observed the fact that so many other countries have had to start to implement new lockdown measures because the Delta variant of COVID, is even spreading much faster than initially expected, or much faster than what we even had at the first phase or the first wave of the pandemic, basically. So there's a lot of concern on that front regarding if economies will be able to be restored to complete normalcy, considering the presence of the Delta variant. But we look at the fact that so many economic managers are reluctant to encourage the total lockdown of the economy, like we had last year, late Q1 and into Q2 2020, where virtually the entire global economy was almost on total lockdown. We don't expect to see that play out in 2021, because we have seen the fact that the cost of a total lockdown is too expensive to bear for most of these government authorities and economic managers. So what we expect to see is the economic activity will still continue, although at a subdued level, given the fact that there will still be a bit of restriction here and there. Also, the confidence of individuals to continue to engage normally, for economic activities, for example, particularly in key sectors like tourism, hospitality, and also transportation, which again speaks to whatever would happen to the crude oil market, again, because the crude oil market is heavily dependent on what happens to transportation, air travel and all, and that segment is also dependent on what happens in key sectors like tourism also. So these are key things that we expect to shape global growth and any projection that we expect to see. As long as the base effect is there, as long as the economy definitely remains, or the global economy remains, open for activities, we expect to see a decent amount of growth in 2021. But we note the fact that there are still many downside risks, to any growth forecast, because if the Delta variant spread gets out of control and vaccinations are not able to keep up with the rate of infections, of which a number of the vaccines are already proven to be not so effective against the spread of the Delta variant, even though it's helping to reduce hospitalization rates and death rates, but it's still not adequate enough to prevent the spread, particularly in some cases where we've seen certain studies in countries like the United Kingdom, for example. So we think those are key downside risks that we have to watch out for, and things like the SDR allocations by IMF, to help boost global system liquidity and sort of reduce the shocks for most of these countries would be needed, particularly from a monetary policy point of view, would be needed to sort of at least keep the economy on that growth path and not create any unnecessary shock from monetary policy.
All right, let's now look at IMF and World Bank. We've seen this deliberate efforts by both of them to help nations, particularly with regards to COVID-19 recovery. In your assessment, how well would you say they are fared?
Okay, so definitely, I think most of the policies that have been put in place by the IMF, the World Bank, I think they've made a lot of progress in terms of, all the stimulus measures that they have made available, particularly to the vulnerable economies, particularly in Africa, in Sub-Saharan Africa, in, emerging Asia, they've been very much supportive. And we can definitely say that without some of these stimulus measures, probably things would have been much worse than we had last year and even into 2021. So very much we can say those policies have been fairly effective, at least in limiting the damage, if not necessarily preventing the damage, but at least limiting the damage, the economic impact on most of the countries. For example, last year, Nigeria got SDR allocations of over $1 billion, which helped to support exchange rates at some point and was able to at least sustain CBN's sort of ability to later start intervening in the exchange rates, in the foreign exchange market at some point in time this year. That was in Q2. So all these things have definitely played a significant part. Stimulus measures from the World Bank, from the IMF, accommodative monetary policy from monetary authorities, across all the different countries, have also been very, very supportive of the recovery that we've seen so far in 2021. So we can definitely say that those policies have definitely played a significant role in at least limiting the impact of the pandemic on the global economy.
Before I let you go, let's quickly touch on what the impact of the upcoming Eurobond issuance would be. We expect the first tranche as we move into September, I guess. Tell us what this means for us.
Yes, so basically, just to speak to that, the Minister of Finance has announced that the first tranche of the Eurobond issuance would be happening sometime early October. So basically, in the next 3-4 weeks, we should be seeing the first road shows and basically towards raising about 2.3 trillion naira, which is roughly $6 billion, roughly about $6 billion, in form of Eurobonds. And, that's definitely going to be very, very supportive of CBN's efforts to sustain liquidity in the foreign exchange market. And number two, it would also provide the federal government with much needed debt financing to be able to push through some of the capital expenditure it has in the 2021 budget. Also, it's definitely the fact that we'll be getting some form of, boost to external reserves means, the increased FX liquidity that will come as a result of that would mean, the pressures that we've been seeing on prices, particularly for those that are FX linked, should sort of subside. For commodities that we import, we expect to see at least a bit of reduced pressure on that front, which is positive for inflation. Lastly, the downside, however, is the fact that there's a lot of concern regarding debt sustainability for the federal government. So yes, while the Eurobond issuance will go a long way in alleviating some of the currency pressures, inflationary pressures, and some of the fiscal pressures that the federal government may be facing in the short to medium term, the concern basically is the long-term impacts of the accumulation of these debt items on the government's books, basically, because our debt burden is becoming quite unbearable, and interest expense, particularly when you look at the debt service to revenue ratio for the federal government, is very much concerning. As for H1 2021, it was about 91% of revenue that was spent on debt servicing alone. So this is a major concern, and we think that that's just a major downside from these Eurobond issuance.
It's a good way to live it. Investment analyst there, Ayorinde Akinloye. Thank you very much for spending your time with us. We really appreciate this. Enjoy the rest of your day.
Thank you for having me, Tolo.
All right,
Have a
then.
nice